Ever wondered how to evaluate investment performance beyond just returns? Today, I'm breaking down key performance metrics that help investors and fund managers assess consistency, profitability, and benchmark comparisons. Let's dive in. First, let's look at down period percent and up period percent. These measure the percentage of time an investment experienced negative and positive returns. If a fund had 30% down periods and 70% up periods, it means it spent most of its time growing rather than declining. Now, let's talk about percent profitable periods. This tells us how often an investment or fund manager delivered positive returns. A higher percentage means a fund is consistently profitable over time. We also have manager consistency, which evaluates how often a fund manager meets or beats performance expectations across different periods. If a manager outperforms in 80% of periods, they are considered highly consistent, making them more reliable for long-term investors. To measure an investment's track record, we use number of observations. This represents how many periods were analyzed. More data points equals more reliable insights. Another key metric is periods above benchmark. This shows how many times an investment outperformed its benchmark, like the S&P 500 or a sector index. Percentage above benchmark takes this further by showing the exact percentage of periods where the investment beat its benchmark. If a fund beats its benchmark 60% of the time, it suggests solid performance relative to the market. Ever heard of quartiles? They divide funds or investments into 4 performance groups. First quartile, the top 25% of performers, second quartile, above average performance, third quartile, below average performance, fourth quartile, the worst performing 25%. The number in first, second, third, and fourth quartile tells us how many times an investment landed in each category. Meanwhile, percentage in quartiles shows the percentage of periods a fund spent in each quartile. If a fund was in the first quartile 40% of the time, it means it performed among the top 25% of funds in 40% of all periods. Great news for investors. By understanding these performance metrics, investors can better assess how often an investment generates returns, how consistently it beats the market, where it ranks compared to competitors. Using these insights, you can make smarter, data-driven investment decisions. Want more insights into investing? Like, share, and subscribe for more financial breakdowns. Thank you.